If you've lived through bull market highs and survived bear market lows, then you've been through crypto cycles. And if you've been through those times, you know the emotional aspect that comes along with it. Everything from everyone in retail buying the all-time high to retail and people living in fear, selling the new lows. In this video, we're going to talk about and dissect the meaning of the emotional aspect, the power that lies within the emotionality of these markets, and how you can leverage it to win in crypto. What is up, everyone? Welcome to Crypto Capital Venture. Thank you so much for coming by. Let's just dive into the video. This is a zoomed out weekly Bitcoin chart. I want to start here for context. It's very simple. It's just a very simple picture to have in our minds as we begin this video, because the power that lies within this illustration has been the most consistent illustration of how to succeed in crypto. Here's a bull market high. This is 2021, and we're going to actually look at some data in regards to what was happening back here. And here's where we are right now. We're in this bear market low formation, and we're actually pretty newly into the bottom of this bear market. We're just getting started here. Now, going back to 2018, and I just did a video kind of talking about some of these things. 2018, here's kind of what the bear market formation looked like back then. And then here we are, 2015. You can see the bear market formation a little bit more drawn out. We know the possibilities. We know what potentially could lie ahead. Now, what I want to talk about real quick in this video is this. I said the power of leveraging the emotionality of these markets. And all that I mean by that is leveraging the mind, is tapping into the mental aspect of this. Because from my experience in crypto, this entire thing that we're doing here, I'm creating this video and you're watching this crypto content talking about bear markets and potentially the duration of this bear market winter. What we're doing here is all mental. It's all mental. And when it is all mental, it stems from preparation. It stems from pushing aside all emotionality. But to do that, the best way to do it is to understand the emotional aspect of crypto and why it's the difference between losing and winning in the space. So let's talk about this real quick to get this started before we dive into this first article digging into the data of when retail is buying. This is the fear and greed index. We track it a lot on this channel. Right now, sitting at extreme fear, 25. I highlighted a couple of things that I think is very important. The crypto market behavior is very emotional. And this sums it up right here, everybody. People tend to get greedy when the market is rising, which results in FOMO, fear of missing out. Also, people often sell their coins in irrational reaction of seeing red numbers. With our fear and greed index, we try to save you from your own emotional overreactions. There are two simple assumptions. When we had all-time highs in 2021, I had a lot of people texting me, should I buy now? Is now the time to buy? And this is because there's this emotional trigger in a human being's mind when other people are succeeding because they already own crypto and they're riding these all-time highs. They don't want to be left out if it keeps going. It's just a 100% emotional trigger. There's not any data really involved in asking the question, should I buy now? It's an emotional question. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. So what we're seeing is very simple. When there's fear, when the emotional side of the brain is saying don't buy, historically, and this is not financial advice, everybody, this is data, and this is something I've learned in crypto, historically, that is the time to buy, at the very least, to dollar cost average with a good amount of conviction. On the flip side, when investors are getting too greedy, that means the market is due for a correction. And this is exactly what we see time and time again in these markets. Here's all-time high areas due for a correction. We get the correction, and I just did a video on this talking about Bitcoin halving to all-time high to correction. This is the three-step pattern of crypto, and the same thing happened in the last cycle. Halving of Bitcoin, all-time high, correction, and the story continues to happen over and over again. And here we are in the middle of this bear market, and we start digging into this. Nearly half of US adults say their crypto punts are worse than expected. Amid the ongoing crypto winter, new data from a Pew Research Center survey has shown that 46% of adult crypto users in the United States are seeing lower than expected returns on their crypto investments. The biggest lesson that I know that just underlines this entire story, the biggest lesson is that crypto is not a get rich quick thing. And if you're out there and if you're looking through YouTube videos or even watching this one and you're looking for a get rich quick and overnight success type of deal, crypto is not it. And there is a stronger likelihood, if that's how you're approaching crypto, that you're going to lose in this space. But the power on the other side of it, if you're looking at the macro, the long term, and you have patience, the power that crypto offers as an investment opportunity, I think, is really, really strong. The survey gathered responses from over 6,000 randomly selected adults across the United States, with panelists participating in self-administered web surveys. Given the vast majority of crypto user respondents said they became interested in cryptocurrency because they were looking for a different way to invest and thought it was a good way to make money. It is a good way to make money, I think. In the long term, again, this is not a get rich quick thing. This isn't an overnight thing. This isn't even a 1 year type of investment and you're going to have your life changed. You have to have the long game in mind. The high proportion of disappointed crypto investors should be attributed to a sharp rise of crypto adopters in the country in 2021, when the market was at its all-time high. Roughly 70% of crypto hodlers in the US started investing in crypto such as Bitcoin in 2021. This is where they started investing, 2021, towards the top. If there's one lesson to be learned there, whether you've been in here in crypto for years or whether you're brand new, it's a repetitive lesson that continues to be told over and over. When we're entering all-time highs, be very, very careful because a correction is likely on its way. And you can just see some of that data there. Now, the other thing is, now here we are, right? We were in this bear market formation. It's kind of like we just entered. It wasn't long ago. It was June 2022 right here, getting that wick to the downside on this Bitcoin chart. And there could be more downside. And nobody knows, with everything going on in the world, how long this is going to last. And now we have this headline. Coinbase CEO Brian Armstrong warns investors to buckle in for a long crypto winter. Whether Brian said it or not, it is the best way to approach bear markets. Find your positioning in how you're comfortable. Don't spend more than you can afford to lose. But on this channel, we always say to anticipate every scenario. And when we're in a bear market, anticipating a long crypto winter is probably the best play, because you're, again, with that mentality, you're ditching the emotional aspect. Investors should bundle up because crypto winter, the popular term for the industry's periodic downturns, could last another 12 to 18 months, says Brian Armstrong. In an interview with CNBC, Armstrong hinted that while he hopes the bear market wraps up in that time, the largest US crypto exchange is preparing for an even more extensive downturn. He said, "We all hope it'll be, 12 to 18 months and a nice recovery, but you obviously have to plan for it being longer than that." And so that's how we think about it. And we don't try to get too cute about predicting the future. If we just don't get distracted and we keep building great products, we're going to do fine over the next 5 to 10 years. Now, this is a guy that's been in crypto for quite a long time. Not only that, running one of the largest crypto companies in the space. So when he says he's focusing on the 5 to 10 year aspect, I think that is very, very good insight. And coming from him, I think it means a lot. By the way, the company has also laid off about 1,100 people, or 18% of its workforce, as it looked to cut personnel costs in June. So that's a big data point in a crypto winter, right? So he's talking 5 to 10 years, and here we are, we're talking, hey, could this be another year-long bear market, right? When we're looking at a date range from this previous swing low that marked this low around, $17,000 to $18,000, if we're extending this, let's extend it a whole year. Let's say the bear market lasted a whole year, the bear market formation, right? So we can take it, well, that's 380 days, but let's just take this, there we go, right around there is a year, right? We're looking at like next summer. Are you prepared for an environment like that where there could be extreme volatility? Meaning maybe we come down and test this lower trend line, and then maybe we're talking about exiting the bear market and then there's another dip down here. Are you prepared for a volatile roller coaster ride environment like that? Because that is what crypto gives us. Whether we're in bear market formations, whether we're hitting all-time highs, whether we're just kind of trading sideways, getting ready to enter the next bull market, whatever it is, we get that roller coaster ride all the time. If we can visualize it, even just one scenario or multiple different scenarios of what this could look like, we can revisit historical data. We can look at what the last bear market looked like. We can look at what the bear market before that looked like. A little bit more extensive, drawn out, a little bit painful, a little bit, actually a lot of bits, like a roller coaster ride. Look at this. Look at the volatility here, almost just retouching previous lows, August of 2015, that it saw in January 2015. Look at the volatility there. Are you prepared from a mental aspect to survive something like that? And that's the question we always have to ask ourselves. Are we prepared mentally? Are we making sure we're not over leveraging ourselves, spending more than we can afford to lose? Are we making sure that we're not here for just some quick crypto gains? One of the biggest lessons that I've learned in crypto is to follow the data. And the data says everything is on trajectory, everything is on track. And while we don't know what is in store exactly in the short, even to the midterm, we do know there's been a lot of consistency on the long term. And we do know that crypto, especially day by day, we see more news coming out. Crypto looks like it's here to stay. We are so early, such a low crypto market cap comparable to all financial markets. So this is just a reminder as we survive this crypto winter. Nobody knows exactly how long, but the biggest play for all of us is to stay strong mentally, formulate a plan, and don't get wrapped up in the emotional aspect of crypto. Hope you have an awesome week. I'll see you in the next video. Hit that subscribe and like. God bless.